Still filing as a sole proprietor while your business is making real money, that decision alone may be costing you every month. Quick note before we get into it. I'm an AI avatar of Askia Roberts, a licensed CPA. Every word here was written and approved by the real me. Here's the pattern I see constantly. Someone starts as a sole proprietor because it's simplest, no paperwork, no formation cost. Years pass, the business grows, the tax bill grows with it, and nobody asks if simple is still correct. In the next few minutes, the myth that keeps people stuck, how the tax math actually works, and roughly where the line tends to sit. The myth is this: I'll switch to an LLC or S-corp once I'm bigger. It sounds responsible. It's actually backwards. A sole proprietorship isn't a starter version of a real business. It's the absence of a structure. There's no legal wall between you and the business, and no way to separate how the IRS taxes your labor from how it taxes your profit. People treat the switch like a milestone you earn, similar to hiring your first employee. But entity structure isn't a reward for growth. It's a tool that either fits your numbers or it doesn't. Waiting for some future big enough moment usually means the decision gets made by inertia instead of analysis. And inertia doesn't check your profit and loss statement before it costs you money. Here's the mechanism. As a sole proprietor, every dollar of net profit is subject to self-employment tax, Social Security, and Medicare, roughly 15.3%, stacked on top of ordinary income tax. It doesn't matter if you paid yourself or left the money sitting in the business account. All of it counts as earned income to the IRS. An S-corp election changes that math by splitting your income into two buckets: a reasonable salary, which carries payroll tax, and remaining profit paid out as a distribution, which doesn't. That's the entire lever, shrinking the pool of income subject to self-employment tax without shrinking your income. It also layers in the liability shield an LLC gives you that a sole proprietorship never had. But the lever only helps once there's enough profit to justify the added complexity. So where's the line? I can't give you your number. Every business is different. And this range is illustrative only, not a promise about what your business will see. For an owner with net profit typically landing in the $40,000 to $60,000 range, the added cost of running payroll, filing a separate business return, and extra bookkeeping can often eat up most of what an S-corp would save, somewhere around $70,000 to $100,000 or more in consistent net profit. The math tends to flip. Self-employment tax savings usually start outweighing the added compliance cost. Again, that's a typical pattern, not your pattern. The only way to know your actual number is to run your actual numbers. Now, who shouldn't rush into this? If your profit swings hard year to year, a great year followed by a lean one, an S-corp locks you into running payroll even in the lean year, and that's a real cost you may not want. If you're brand new and still finding out whether the business sticks, the extra compliance may not be worth it yet. And if your profit consistently sits on the lower end, the accounting and payroll fees alone may cancel out any tax benefit. You may actually come out behind. This isn't a do it now video. It's a know where you stand video. Your answer depends on your profit trend, your risk tolerance, and how much administrative complexity you're willing to carry. Quick ask before we get to the link. If this is useful, go ahead and subscribe. We post one of these every week. Now, this plays out differently depending on what you run. A healthcare practice, a contracting business, and a professional services firm hit this threshold at different points and face different rules along the way. The link in the description goes to the right one for you. Just tell us what you run. Remember that pile of invoices and the self-employment tax line that didn't add up? The fix was never learning to accept a bigger tax bill. It was one afternoon spent finding out whether the numbers actually support a change or whether staying put is genuinely the right for now. Either answer is fine. What isn't fine is guessing. You need about 15 minutes and the right numbers for your specific business. That's what's waiting behind the link below.